What is going on, everybody, and welcome to bootcamp day number 8. Today we are going to be piecing together everything that we've gone over these last few days: support and resistance, supply and demand, Fibonacci, price action, volume, piecing it all together to identify high probability setups. So real quick before we hop into it, as always, make sure you guys are doing your daily check-in. Comment down below letting me know that you guys are still rocking with me and you guys are dedicated to making it the full 31 days through this boot camp. While you're at it, also make sure you are subscribed to the channel with that bell notification on so you do get notified every single time a boot camp video is uploaded. But without further ado, let's hop right into it. And if you haven't already, I do highly suggest that you are following me on Instagram at Carhorn, CARWHORNS. I also post a lot of free education on over there. So if you guys do want to follow me, I will be leaving a link down in the description for that. All right, so hopping right into it. Today, I actually ended up taking a trade on SPY and I gave everybody the exact bottom on SPY. So I want to go over how did I find this level, why it was important, and I believe we discussed it yesterday in the Fibonacci video if I'm not mistaken. So if I pull on over today's watch list, and I do go live every single morning on this YouTube channel at 8 a.m. Eastern time, you can see right here that I said SPY interested in a bounce at 445 to 445.3. 445 just because that's a psychological area of support, but 445.3 was a Fibonacci retracement. So now if we head on over to the chart, and that was the exact bottom today, was at 445.3. So if we go to the 4-hour chart right here and we take a pivot low to pivot high, again, if you guys watched yesterday's video, you should know how to draw Fibonacci retracements. If you have any questions about it, definitely make sure to leave them down in the description. But as we see, taking that pivot low to pivot high, and then this pivot low to this pivot high, we actually had a really nice Fibonacci cluster, which we had the 61.8 and the 50% retracement at the same exact area, making it a higher probability for a bounce. So now if we break it down to a 5-minute time frame, the trade that I actually ended up taking was right here, and I caught a nice 80-cent scalp to the upside and eventually was stopped out towards break even. Now, a little later in the day, it came down and it hit the exact level, as you can see, 445.28. Missed it by 1 penny, my bad. And then from there, price just absolutely exploded. So now, digesting, why did I like this entry right here? And also, how could you have identified an entry over here? So if we break it down to a smaller time frame, what I was watching on the 1-minute time frame was look at how price reacted as it came down to our area of interest. Again, to find high probability trades, we need an area of interest, we need bullish or bearish price action, depending on if we're looking for a bounce or a reject, and then we need volume to confirm the level. That is how we find high probability setups. So as we see, as price is coming down, we have a very large volume spike right here. But then as price comes down, we get a nice bullish hammer with a long lower wick, and then look at that 1-minute volume. We have elevated volume at the level of interest. So what does that mean? That gives us our entry in the trade. That is personally why I ended up entering long today. Price action at the level of interest confirmed the long entry, and our stop loss was right below 445.28. And again, we were able to catch this up into that 446.25, a nice little 80-cent scalp. Nothing crazy compared to this move right here. But then as we can see a little later in the day, as price came down and retested this area, it got bought up at the 50. And then we had a very small candle right here on the 1-minute time frame right off of the level of interest. As a result, you could have gotten long with a stop loss below 444.15, 445.10. And as you can see from there, price just absolutely exploded. Now, say that you ended up missing that entry right here, it doesn't mean you can't get into the trade. In another video that we have in this bootcamp, we're going to talk about FVGs, which you can see we had one right there. But if we go to a 5-minute time frame and we start looking at this, we can see price came down, had a nice little bullish candlestick, came back down, retested the area, continued to push to the upside, dipped back down, and it actually set a higher low. So typically when we are trading at areas of interest, we want to try to get in as close to that level as possible, because we do know our stop loss is right on the opposite side of that level. Now, as price came back down, what do we see? We have this nice lower wick right here. Buyers entered the market and we start setting this higher low, and then from there price continues. You can look at multiple different time frames to help confirm entries as well. Look at the 15-minute time frame. As price comes down, very heavy 15-minute volume. This 15-minute sell right here, not really that much volume compared to previous candlesticks right here. Price comes down, very nice 15-minute candle right here as well. Price pushes up, comes back down, sells off on decreasing volume, 2 15-minute candlesticks in a row, and then we get a bullish engulfing candlestick right here with heavy volume. So again, you always want to watch the price action at your areas of interest. If the price action does not confirm the level, you do not take the trade. If we look at this trade that I ended up taking yesterday on SPY, the entire reason why I like this trade was because what I did was I took the previous day's high down to the previous day's low. Price came up, it rejected the 50% retracement on QQQ, it actually hit it to a T. But as we see on the 15-minute time frame, price came up, and again, you could have went in short based off of this. I was watching the 61.8 personally, but you could have went in short based on this entry right here. Price tried to break above, very bearish candlestick, 5-minute candlestick closed below, could have went in short, stop loss right above this high. So as I was looking at this, I was like, okay, let's take this pivot high to pivot low and let's watch the 50 and the 61.8% for a potential reject. So when I ended up entering this trade, I went back and journaled, probably shouldn't have gotten the first entry at the 50% retracement, really wasn't too much confirmation there, but that 61.8 did validate an entry. If you look at this 1-minute candlestick before, we had slightly elevated volume with that upper wick right there, showing that sell orders were getting hit, but it didn't necessarily hit that 50% reject. I really like the 61.8 in this example. We had this nice upper wick right here, and then price started to reject. We added to the position, and we were able to catch this down into a new low of day. Now, if we're looking at the 5-minute time frame, we can talk about the SPX trade that we ended up taking on, what was it, Friday. Well, it wasn't on SPX. We used SPX to trade spot. So if we look at SPX, we have a level of interest, 4,500. Psychological areas on SPX and ES are very important, 4,500, 4,600, 4,700, etc. We can see that SPX came down to the 4,500 mark. Nice 5-minute candle, bullish candlestick right here. Look at this lower wick right off the area of interest. So now if we head on over to SPY at the on the 5-minute time frame and we look at Friday, what do we see? Elevated volume at the level of interest, bullish candlestick. Piece that together. We have the price action, we have the area of interest, and we have the volume confirming the trade. What does that do? Sets up for a high probability trade, and we were able to catch this move to the upside. Something else I told everybody to watch on the watch list today was Apple for a reject at this 1 hour 21 EMA. So again, we have a level of interest. As we see, price push up, and it missed this level by like 2 cents, pretty much, right? Came up, pretty much tapped it, and then dropped to the downside. Let's break it down and start looking at the price action. So as we see, price comes up, it tries to test it in the pre-market, gets very close, and then we have this hard sell-off right here. So price came up, pretty much hit the level, and then reacted off of that level. Now, the market wasn't open at this time, so obviously you wouldn't have been able to get an entry, but maybe a little later you could have caught an entry. So as we see, we have this bearish engulfing candlestick right here. Price tries to push up to the upside. What do we think this did? Probably made a retracement, 50, 61.8. Sure enough, right to the 61.8% retracement. Let's break it down to a smaller time frame on the 1 minute, and then look at that price action. Price comes up to the 61.8. Again, piecing everything together, multiple time frames. We also have a class on that later in this boot camp. But price came up to an important area, rejected off of it in the pre-market, had a bearish engulfing sell-off right as the market opened. We want to look for a pullback to then get short. As we see, price comes up, 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 and then we get this nice bearish candlestick right here with elevated selling volume. Again, price comes up, and we can look at this volume right here and this small upper wick and conclude that sell orders are being hit up at this area, or sell orders are being filled. So you could have gotten short with your stop loss right above this high. And as we see, price sold all the way down into 177.50. If you didn't like the 1 minute time frame, you could have looked at the 2 minute time frame. Same exact thing. Elevated volume, nice upper wick. We could conclude that a majority of that volume came in at this 61.8. Again, area of interest, confirming price action, confirming volume. That is what we want to see when entering a position. Now what we're going to do is we're going to look at some previous trades that I've taken in the past. I just pulled up, a few random ones to show you guys. But in this example, as you can see on QQQ, I took the pivot high down to the pivot low right there. We were watching the 50 and the 61.8% retracement. As price traded up to that 61.8, you can see that it hit it to a T, which then confirmed the entry to get short. And as you see, price was able to sell down into 379 before rebounding on the day. Again, level of interest, confirming price action, confirming volume on a lower time frame. You could have gotten short with a stop loss right above this high right here. And as you see, price continued to flush down. Looking at this example right here, I ended up taking the pivot low to pivot high. And what you're going to notice is a lot of my trades are fib based. That's just because Fibonacci is my all-time favorite trading strategy when it comes to intraday trading. But as you can see, I took this pivot low to pivot high right here. And as price traded down to the 61.8 and even the 50, I just didn't enter at the 50. I entered at the 61.8. But as we can see, price came down, hit the 61.8% retracement. Look at that candlestick right there. Even if you wanted to add half at the 50% retracement and then the rest at the 61.8, they both confirmed an entry. Look at the price action at the level. Look at the price action at the level. Price had a very nice lower wick, pretty much a bullish hammer, whatever you want to call that candlestick right there. Very long lower wick off that level of interest. And then as you can see, price continue to push to the upside. I'm pretty sure with this trade, I just caught it in the VWAP, but it did continue higher on that day. If we look at this example right here, taking pivot low to pivot high right here, you can see that I had a different 50% fib. I guess I didn't end up taking the trade down there. But as we can see, pivot low, pivot high right there, 50% retracement right at VWAP. And as we can see, price made a very nice move to the upside off of that level. Again, breaking it down to smaller time frames, you could have sniped an entry. Look at that, right at VWAP, right at the 50% retracement. Very nice bullish candlestick, elevated volume, 1 minute time frame, get long, stop loss right below that low. And as you see, price continue to push up into a high of 437.44. And at this setup right here, this was just a basic bull flag, which we might discuss throughout this boot camp. I don't know yet. But typically what we'll see with bull flags is we'll get 3 bars of consolidation back to an 8 EMA, which validates the entry. And then you get long with your stop right below the 8 EMA. So we were able to snipe this right off of the 8 EMA. Again, price action confirmed, pushed into a new high a day, and we were able to catch that move right there. If we move on to the next trade, the 429.61 level that I discussed, I think it was yesterday, I was able to take a trade based off of that. So as price comes up on the 5-minute time frame, we can see that we have a lot of volume on this 5-minute candlestick right here, but it's a smaller candlestick with a nice upper wick. What does that suggest to us? That sell orders are being hit because you have an area of price action. You look at the volume, you look at the wicks, and you can conclude that a majority of this volume probably came from up here, right? So as price came up to that 61.8% retracement, we got short with a stop loss. I forget where it was. I think it was like 429.8, 429.9, something like that. And we were able to catch a nice move to the downside. Unfortunately, didn't catch all of that, but that is okay. But either way, you can see the risk was very limited. Price action did confirm at the area of interest, and we were able to catch a nice move to the downside. If we look at this SPY example, you can see I took the pivot high, that high of the day, down to the low of the day right here. We had a really strong support zone right here. So it took the high to low and was using the 70.7 retracement. As price trades up into the area, we get a nice little doji with elevated volume right at the area of interest. What does that tell us? Sell orders are being hit. Get short with your stop loss right above this area. And as you can see, we were able to catch that down into the low of day. Now with this final trade that I'm going to be showing you guys, again, yet another fib trade, but I took the high of day down to the low of day, and as price pushed up to the level, I can't remember if we got short on this candle or like halfway through this candlestick, but either way, look at the volume at the area of interest, right? We have a smaller candlestick than this one right here, but very high volume on this. Little upper wick, what can we conclude? Sell orders were being hit at this area. Again, area of interest, volume, and price action confirms that more than likely sell orders are being hit right here. And actually I have an arrow pointing at this candlestick right here, so I'm pretty sure I got short on this candlestick right here. Definitely not all the way down here, probably like halfway through the candlestick, but either way, again, price action, level of interest, and then the volume confirming the trade. So that is what I want you guys to recognize. We have areas of interest, we watch price action, we watch volume. If it confirms the trade, then we enter the trade. So right now I'm in a swing trade on SLB. I will say, entered a little late on this, but I am looking for more upside on it. Reason I like it is price came down to my area of interest and we're having a very bullish reaction off of it. So as a result, we got long and I am looking for more upside. If this thing can crack this high right here, I think I said 58.7 was the level, or 57. Yeah, 58.7. If we can crack this, SLB has more upside. But that is the most important thing I want you guys to get from these last few videos that we have discussed. We can even go to meta. We caught a very nice meta reject last week. If we go to the 1 hour time frame, and I believe, let's go to a 5-minute because I'll be able to tell you when we caught it. It was this trade right on over here. So I actually caught a really nice meta reject right down into VWAP. So if we just go ahead and mark this so I can tell you guys why I like this level. So if we go to the 1 hour time frame, I told everybody I was watching Meta for a reject up at that 1 hour 21 EMA. And as price came up to the level, watching the smaller time frames, 1 minute and 2 minute, as I started to notice the rejection, that is when we ended up getting short. And we caught like a nice, I think it was like a $2 move to the downside off of that. Yeah, so if we look at this right here, we can see that Meta had a nice push to the upside. Look at this candlestick right here. 1 minute time frame, very bearish candlestick. We got short like halfway through this candlestick because the volume started to come in. Stop loss was above this high and we were able to catch it down into VWAP. So like 314 down to like 312.30. So not a $2 move, like $1.50, $1.70, but either way, it was still a very nice trade. There's VWAP right there. I could literally do this for days, guys. All you want to do is find a level of interest, watch the price action, watch the volume. Because price action by itself, it's pretty rare that I'll take a trade just based off of price action. Like if we got a bullish hammer down here with elevated volume, there's a good chance I don't really care about it. But if we get a bullish hammer with elevated volume at an area of support, then I care about it. But that is going to wrap up bootcamp day number 8, pretty much piecing together everything we've learned over these last 8 days. Going into these next few days, I do have new topics that I am going to be teaching, and I am very excited to teach them to you guys. So again, if you guys did find value in this video, make sure to smash that like button. If you haven't already, make sure you are subscribed to the channel with that bell notification on so you are notified when a brand new bootcamp video goes up. And if you haven't already, make sure to do your daily check-in. Let me know you guys are still rocking with me down in the comments. Other than that, everybody have an amazing rest of your day, and I will see you guys tomorrow in bootcamp day number 9.